Welcome back. I'm Pratap here. Today is the 22nd February 2024 and this is the combined session for both the question and answer and also analysis of high liquidity zones generated in our yesterday's report. And this is a very important session because I'm going to address some of the important questions you are repeatedly asking several times, even though I answered earlier, but I will show you with practical examples. So before we get into your questions, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. You can access all the training lessons from the playlist supply demand zone price action course. From the playlist you can click on this supply demand zone price action course. I have also provided the link to this playlist in this YouTube video description. You can click on the link and you will directly get into this page. And then scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills. And I would also like to address some questions related to supply demand zone price action study because I am believing some of you people are not studying properly. I'll give you some tips. And also I provided the link to our Telegram channel in this YouTube video description. And join in the Telegram channel so that it will be helpful to you because each time when we release a video, we will provide an update in the Telegram channel. So please make use of this opportunity and strengthen your skills. Now let us get into our analysis and the question and answer related discussions. The first question I am going to address is about how to trade in futures charts, because we are not analyzing the futures charts. We are analyzing only equity charts, but taking trades in futures or options. But when you look into F&O prices and equity prices, always there will be some difference because there will be some premium will be there. Even in futures also premium will be there. But in futures the premium is a small amount, very small amount. But options you will be seeing a huge difference in the premium. So because of that, always you see a difference between equity stocks and derivatives market. There is a difference of prices. But why we are not analyzing in future charts? Why we are analyzing only equity charts? Let me address this question first. We all must understand derivatives are derived from the equity charts. The stocks in derivative market, they are all derived. That's why we are calling derivatives. Derivatives, they are derived. They are derived from the equity. So what is the underlying asset for your futures or options? The underlying asset is your equity chart. If it is indices, for your NIFTY or Bank Nifty, the underlying asset is your NIFTY 50 or NIFTY Bank. They are the underlying assets in the equity segment. And the values in that underlying asset, the underlying asset is nothing but the original. That is the original. That is the real. They are the real assets. And these real assets determine the actual price movements in the market. Based on the movements in these equity stocks or equity indices, the prices in the derivatives also will be changing. Please remember, your derivative prices are not changing the equity prices. Your equity prices are changing the derivative prices. The movement in the equity stocks will reflect in the derivatives. But there is a difference in the prices. The difference is because of the premium amounts. So that is the reason why you are seeing the differences. Then how to place our orders? This is what your question. So let me address. See, if you are really know the premium difference, with the difference you can deduct and you can place the order. That is one approach. But the best approach is, see, always we place limit orders. Some people may keep even market orders also. And let me take your Nifty 50 as an example. Let me go to your daily chart. Previously, what is the most recent training lesson you learned? Recently completed. The latest lesson. That is a price over extension or price over extended. That is what we discussed. Most of you people attended that session. Many of you learned how to trade with the help of this price over extended and EMA Confluence, both together. We have built a strategy. That strategy also explained in that price over extended. Same strategy today you can apply to Nifty 50. You would have got a very good profit today. See, today prices are entered into, first let me delete this so that you will get clarity. Now look here, today, see earlier there is a price over extended. Nifty prices are moving far away, far away, far away from the EMA 20. When prices are moving far away from EMA 20, we call it as price overextended. Whenever there is a prices are overextended or whenever price overextension is there, what happens? The prices tend to reach the EMA 20. The moment they reach to the EMA 20, the overextension will be completed. When they are reaching the EMA 20, if there is any zone near that, we can plan a trade. But is there any zone here on daily time frame? No, there is no zone. Then what you have to do? If daily time frame, if there is no zone, you need not worry. You can go to the lower time frame, and if the daily EMA confluence is there with lower time frame zone, still you can plan the trade. So for that, what I do first, let me draw a horizontal line to remember this EMA 20 somewhere here. Yeah, this is the daily EMA. Is there any demand zone on daily? No, but we can look for a demand zone at lower time frame. That is what I have explained even in our recent training lesson, the lesson 17.4, if I am not wrong, the price over extension. So now go to the 75 minutes time frame. See here, this is the EMA. Do we have any zone in this area? Yes, we have a zone. We have a drop candle, two base candles and a rally candle. And we have one more, we have a leg-in candle, base candle. Again we have a rally candle with the hidden body. I already explained first phase of the training program, zones with the hidden body or invisible zones. So this is an invisible zone. And also I told you invisible zone having more success rate compared to the normal zones. Compared to the normal. I will not say they have a very great success rate, but compared to normal zones, they have a good success rate. Apart from that, now this zone is having EMA confluence. Let me draw this zone. This is a 75 minutes demand zone. See, we have a rally, that is a base, that is a leg candle. This is a ERC candle. Then we have a base candle. Then again we have a rally candle with hidden body. And now this zone is having daily EMA confluence. How can we say it is having daily EMA confluence? Go to the daily time frame. Now you see, this is the 75 minute zone. This is the 75 minute zone. This 75 minute zone is having a daily EMA confluence. Not only daily EMA confluence, if prices reaches to this zone, the overextension will be completed. See, there is a overextension. Now prices are going down, and the moment today prices enter at some point of time, prices are at this area. Now overextension is completed. Okay, now can we take a trade here? Yes, you can take a trade, provide the risk is not within your limit. For that, what I am doing, I am going to 15 minutes. I want to fine tune the zone. Is there any 15-minute zone available here? Let me go to the 15 minutes time frame. Yes, we have a 15-minute zone. We have a leg candle, 1, 2, 3, 4 base candles. That means almost the 75-minute zone and 15-minute zone are same. Drop 4 base candles. Again, you have a rally candle with the hidden body. Okay, I'm not again drawing the separate 15-minute zone because same 75 minutes, 15-minute zones are same. Now within this, is there any 5-minute zone? This is the one. So is there any 5-minute zone? Yes. Here we have two 5-minute zones. This is one 5-minute zone. Sorry. Demand zone. Okay. We have a leg candle, base candle, a rally candle with a hidden body. That is a leg out candle. Okay. Next we have one more 5-minute zone here. We have a drop candle, two base candles and a rally candle. This is another 5 minutes zone. So this is the way we have two 5-minute zones, drop, base, rally. And moreover, lot of rejections from this zone. This is one price action clue. When there are strong rejections from this zone, previously I told you, there is nothing wrong in taking even second trade also. What about this 5-minute zone, where we have to take entry in the first one or second one? This is not a high liquidity zone, right, this 75 minutes. If it is a 75 minutes high liquidity zone, always we give priority to the first one. If this is violated, we will plan second trade. But this is a normal zone, it is not a high liquidity zone. But normal zone having a different setup. This setup is also having some importance and some priority. This setup is also having some good success rate. And what kind of setup it is? It is a setup based on price overextended and EMA confluence. Both the concepts together, this setup is prepared. This is what I explained in our lesson 17.4, price overextended, our recently released training lesson. Okay, if you look into these two, which one we have to give priority? For that, let me go to the daily time frame, you will get the clarity. Now look into this. We have two 5-minute zone. This is the first one and this is the second one. Which one is having a EMA confluence out of these two 5-minute zones? The second one is having, the second 5-minute zone is having EMA confluence. Of course, this entire 75 minutes having EMA confluence. Within the 75 minutes, the 5 minutes area is having EMA confluence. That's why we will give more priority. It doesn't mean we should not give priority to the first one. Generally, what happens in the EMA confluence, sometimes the EMA, the prices may go a little below or maybe from a little above, they will go back again. But we are giving more priority to the second one. It doesn't mean first one is not good. That means if you would have planned your trade in this area, but you are considering this entire thing as a 75 minutes trade, because your 75 minute zone is actually having EMA confluence. Internally, the fine-tuned 5 minutes is having EMA confluence. But your idea is you want to plan your trade on the 75 minute zone. Maybe to minimize the risk in the fine-tuned area, you want to take your entry. But this is a 75 minutes entry. Then what is your target? Your 75 minutes target. Do we have a 75 minute supply zone? Yes, we have a 75 minute supply zone. You can consider this as a leg candle, two base candles and a drop candle. Or even you can consider this is a rally candle, three base candles and a leg out candle. Either way you can plan, but I consider, okay, I'm convinced with this, two base candles and a drop candle. So this 5 minutes area internally fine tuned is your entry inside. So actually this is a 75 minutes trade, but you are taking a deep inside, you are taking the entry. And target is 75 minutes. This is equivalent to your MIT trade. 75 minutes LTF. LTF is 75 minutes. You can assume like that. Generally, MIT trade, you will reach the target within 1 week time period. But today, luckily, same day itself it reached the target. Otherwise, you would have waited for few days until it reaches the supply zone. And where you did this analysis? On the equity indices. This is an equity chart. But where you are planning your trade? You are planning your trade in the futures. Always there is a difference of the prices due to some premium. The premium amount is the difference. Okay, here at what price you are planning to take your trade? Let me go to the 5 minutes. The price I am going to take here is the open of this candle. This is the entry, type 2 entry. What is the open? 21892.90. Let me, for easy calculation, let me round the value. It is 21893. Let me take a calculator. 21893. Let me cross check once again. I'm keeping my mouse here and checking the values here. Okay, I'm keeping. Now what is the value? The open 21893. 21893. This is equity price. This is my entry. Then what about the futures? What is the value in the futures? How do I know the value in the futures? How do I know what is the premium value to add to this value? So we will not do our trading like this. What we do, we go to the futures chart. I'm opening one more window, and in this window, let me open NIFTY futures chart. This is the one, your NIFTY futures. The one below is, this is the gift NIFTY. This is the one we have to follow. This is at our NSE. NIFTY index futures. Let me open this chart. What is the closing price in the futures chart? 22269. But in equity chart, 22217.5. See how much difference is there. This is 17 and this is 69. 222 is common in both. Nearly 52 points difference is there. If 52 points difference is there, how to plan our trade? At what level you have to plan? That is what your question, right? You've been asking again and again for several people. I'm not talking about a single person. This is the third or fourth person asked the same question recently. What is the answer? I already gave an answer, but I didn't show you on the charts. The reason now I am showing on the charts, so that you won't get any confusion. Previously, orally I have given my answer. Now with charts I am going to explain. So everybody please concentrate here. How generally I trade. Maybe you may follow a different approach. That is a different story. I am explaining you my method of trading, analyzing in the equity charts and taking trade in the futures. Why I am analyzing in the equity charts? Because equity charts are more accurate. Futures charts are less accurate due to the premium differences and more volatility in the market. Because of the volatility, premium values drastically change. And more importantly, during expiry dates, there is high volatility. You see sudden up and downs, and all our zones will be violated in the futures charts. But actually that is not true in reality when you look into equity charts. So that is the reason why I am not depending on, because of these volatility differences before the expiry dates and all. If your zones are pierced or violated, your statistics will change, your trends will be changing. That leads to completely wrong analysis. That is the reason why we should not depend on the futures charts. Your analysis should be always equity charts. Based on that analysis, you can plan your trade. How? Okay, now let me get into this today's chart. So we have completed our analysis, and when prices are entering, you need to plan your trade. See here, second entry also it gave in case if you missed, but second entry went little deep. It didn't hit the stop loss. Please remember, some 2 points or 3 points before the digital line, prices turned back. That means the zone is not pierced. Please remember, prices did not touch the digital line. But we got two trading opportunities. This is the first one. If you missed it, this is the second one. And after that, see the rally here. Okay. When it reached this particular candle at 10:20, for better accuracy of our calculations, let me change it to 1 minute time frame. Let me open 1 minute chart. You get better clarity. And here also, let me open a 1 minute chart in Nifty futures also. See here I didn't draw any zones. But how to find the futures price? How to find futures price? Very simple. All of you remember this technique. At what time it reached this zone? At 10 o'clock, 23 minutes. Today at 10 o'clock, 23 minutes, it reached the zone. The moment it reached the zone, whatever the price at this level, prices reached the zone at that time, whatever the price the futures chart is having, take your trade on that price. Do not take your trade with equity price on futures charts. That is very wrong. You should not expect equity price on the futures chart. Is this point clear to everyone? Let me tell you again. You should not take equity price on the futures chart. Then how to plan our trade? When prices reached this, your entry zone, this is our entry zone. When prices reached the entry zone, exactly at that time, whatever the price is there in the futures chart, with that price, you take the trade. Okay, when it reached this particular location at 10 o'clock, 23 minutes. Because seconds data is not available, otherwise we would have got more accurate value. But let us take some round off value here. It doesn't change our statistics much, our calculations much. We get near value. So at 10:23 candle, let us go to 10:23 candle in futures chart. See, this is the 10:23 candle. At 10:23 candle, somewhere here, it reached the zone. Let us say it could be somewhere here or somewhere this price. What is the price here? See the left of this chart, see the right side of this chart. On the scale, you are able to see the value 21,960. Somewhere around 21,960. The round value we take. Let me repeat. 21,960. Open another calculator. 21,960. Let me place my mouse once again and let us cross check this value. So it is 21,960. And what is the equity value at the time? Let me open the first one. See, 21,893 equity price, but futures price is 21,960. There is a difference in the price, but you are not trading with 21,893. You placed your order at 21,960. Why? Because when this 21,893 price is reached at Nifty 50 equity chart, now prices entered into the demand zone, the 5 minutes demand zone. Exactly at that time, futures price is 21,960, somewhere around, maybe some 25 paisa, 30 paisa difference. I mean, the points, 0.20 or 0.30. But otherwise, this is the price, around this price. So, which trade you will be placing your order at 21,960? You will be placing your order. This is your buy order in futures. Did you understand this point, or you want me to repeat? Okay, let me repeat again. When prices in equity chart, when prices reaches 21,893, it reached the 5 minutes demand zone. Exactly same time, when you look into the futures chart, exactly the same time, when you look into the futures chart, the price is 21,960. So you will place a buy order. You will place a buy order at 21,960. In futures chart, you will not use, 21,893. This is equity price. Exactly at that time, the futures price is 21,960. So you will place your order. You may ask a question, because of this huge difference. How many points difference? Maybe around 67 points difference is there. This 67 points difference is due to the premium cost in futures. Futures use a small premium cost, very small. That's why you are seeing this difference. Is it not going to affect our profit margin? You may ask this question. No, it does not affect. The reason is, what at the time of reaching the target at equity chart, whatever the price is there, in futures chart also, some 67 rupees difference, same price will be there. If not exactly 67, at least maybe some 5 to 10 points difference might be there due to changes in the premium prices. You will not see a huge difference. That is what I am going to show you practically now. How much profit we got in equity chart, how much profit we got in the futures chart based on their prices. Equity price is different, futures price is different. Okay, I hope all of you got clarity. What price we have taken? The price is 21,960. How we identified? When prices reaches to 21,893 in equity chart, this is our entry price. Exactly at the same time, futures chart is having around 21,960. I'm not saying exactly 21,960, but around 21,960. Maybe 1 point difference. Because roughly we are calculating, not exact accurately. Exact accurate value, when prices reaches to this level with exactly same seconds, whatever price is there, that price we will take. Okay, now what about the target? When it reached, let us go to, this is equity chart. Equity chart, when it reached the target on this candle. Which candle? At 15 hours. That is today at 3 o'clock, it reached the 75 minute supply zone. Actually, we are expecting this target should be reached in next 2 to 3 days, or maybe 4 days or 5 days. But today itself it reached the target at 3 o'clock, afternoon 3 o'clock. And what is the price here? We want to exit somewhere close to the proximal line of this supply zone. What is the value here? Somewhere around, let me take the round value, 22,190. 22,190. Near this zone, 22,190. So let me take the calculator. This is equity value minus 22,190. Actually, we have to calculate 22,190 minus 21,893, but we are calculating in a reverse way. So we get negative value, not a problem. After that, we will change it to positive value. So 22,190 minus 21,893. This is the difference you have to see. How we identify 22,000? Near the distal line, the value is 22,190, just before the distal line. You got 297. Let me change it to positive value. So you got 297 points. That means almost close to 300 points. Almost close to 300 points. But in futures chart, how many points profit we get? Almost you get the same, maybe a difference of maybe a 10 or 11 points difference. That's it. Not more than that. Sometimes you may get maybe around 290 points. Sometimes you may get around 310 points like that, or 305 points. We'll see. Now I am moving to futures chart. Currently we are at equity chart. Now we are moving to futures chart. Which candle we have to look for? What in which candle? At 3 o'clock candle, afternoon 3 o'clock candle, it reached the target. So look for the same 3 o'clock candle. Which one is having 3 o'clock candle? This is the one. This is the 3 o'clock candle. So somewhere here, somewhere near close of this candle, because here also somewhere just a little above close of this candle, we will take somewhere here. The round value we will take. So what is the value? Or if you want, go a little above or little below also you can go, but few points difference only you will see. Okay, somewhere here, this is a, next candle, this is the one. I am seeing the wrong candle. This is the one. This is 3 o'clock candle. In 3 o'clock candle, somewhere at the close of this candle, the price is 22,119.75. Let us give a rounded value, 22,200. Not 22,220. Sorry for my mistake. The round value is 22,119.75. The rounded value is 22,220. 22,220. So this is the futures calculator minus 22,220. This is the value. Now compare both these calculators. So what is the value here difference? You got 260 plus or minus. So almost 40 rupees difference is there. Why this 40 rupees difference? Because of the volatility conditions in the market. The volatility conditions will be affecting the premium in the futures. But such kind of premiums we are not using in equity. Equity only directly prices will be moved. That is the reason why sometimes you will be seeing some difference in between these two charts. But okay, fine, it is 40 rupees difference. Here a 40 rupees extra is there. That is okay. So now which one you have to take for your calculations? This 260 is your profit into 50 because the cost. You got 13,000 rupees profit by taking one futures. This is equity. In cash segment, if you buy with the equal amount of the 50 Equity means you have to take only this one. What is that name? Sorry, I forgot. Yeah, ETF, exchange traded funds. If you want to take a cash trade, we have ETFs are available, exchange traded fund. That is NIFTY Bs. NIFTY B is a exchange traded fund. Like how we are buying stocks, same way ETFs also you can buy. So how much profit we got? 13,000. And let me open zero the margin calculator. See here Nifty 50. This is the current February. I'm opening February Nifty 50. What is the net quantity? 50. That is what we already did the calculation into 50. We got 1300 profit. But what is the margin cost? 1,25,000. But it will slightly change. Because at the time, whatever the price may be slightly below this. But okay, we are calculating the rough values. Maybe it could have been at 1,25,000 rupees margin. Maybe 500 rupees margin is increased because prices are moved drastically up. But at the time when you want to buy, the margin cost would have been a little lesser. But somewhere around this, but a little lesser. But for our calculations, okay, fine, taking this value, it doesn't make much difference. Why we are using this value? For calculating our ROI. So 13,000 into 100 divided by 1,25,541. You got a 10% ROI you got. Your investment is 1,25,000, around 1,25,541, and you got a profit of 13,000, which is equivalent to 10.35. That means close to 10.4% ROI you got. It is an excellent rate today. Which concept helped you to get such a huge profit? The concept you learned in our recent training lesson. The concept you learned in the recent training lesson helped you get this profit. Zone confluence and daily time frame. This 75-minute zone is having confluence. Today prices entered into this area. And here we took a trade. And after that, see how prices moved up. This is one advantage of EMA. But when you have to take these kind of trades only in trending market, either it should be uptrend for long trades or it should be downtrend for short trades. Before that, there should be a price over extension, and by the time to this zone having EMA confluence prices reaches, the zone confluence should be there. That means price over extension completes and you can take a trade. And the trend is uptrend. Currently trend is uptrend. Only bullish trend only you have to plan such kind of trades. That is what I clearly explained this strategy. And those who ever learned that strategy, today you would have got 13,000 rupees profit, which is 10.35% ROI, return on the investment. That is as per one margin cost, futures margin. The futures margin cost is your investment. On your investment, you got 10.35% profit you got. Our average ROI for high liquidity zones is 6.1. This is not a high liquidity zone. But still it gave you 10% ROI it gave. And this is overextension and zone confluence concept. Of course, some price action clues also we have seen in 5-minute zone, strong rejections. See, all these concepts together made this trade a successful trade. Actually, this 5-minute zone is tested zone. Even then we took our trade because there is a EMA confluence is there, that is one point. Overextension is completed, another point. And third point is a lot of rejections are there from this zone. Let me go to 5 minutes. You will get clarity. See the rejections here. Huge rejection. Just before next time they are trying to enter, again institutions might have added new orders here. Again rejections. All these are all positive indications. How to trade by using futures, but analyzing equity stocks you would have got clarity, but still this is not enough. I'll be giving you 2 more examples because today we got 2 more successful trades and one stopped out trade is also there. In all these examples I will show you this calculation because sometimes some people need more examples to understand the concept clarity. Some people may understand by seeing the first example itself. That's why I have to keep all the people your understanding and your learning curve, everything I have to keep in mind. I have to give you the examples. So this is the first example. Generally, after getting this trade, whatever the statistics you calculated, you know what I do? I will open the Excel sheet. Here I will add 202 NIFTY and yesterday's it is reported and then I will enter. But why I am not entering here? That is not a high liquidity zone. In this Excel sheet, I am maintaining only high liquidity zones. Today we got 3 trades, 2 successful and 1 stopped out. All the 3 I have to register here. How I am calculating, I am showing you how I took the trade or how we take the trade, not how I took the trade, how generally we take the trade. I may not be taking all the trades, right? I may take few trades. This one also I have to give clarification. Someone asked this question. But I already gave the answer in the Telegram channel, but in case if you are not in the Telegram channel, still you need to know. Because in the comment section of the 200 videos, couple of members, they were thinking that all these are all my trades. All these are all not my trades. All these are all high liquidity zones suggested by our software. I am maintaining this Excel sheet to check the performance of our software. I am not maintaining this sheet to show you my trades. I am not supposed to show you my trades. I will never show you my trades. And also I will never ask you all your trades also. You may tell in the comment section, okay, you may express your happiness by saying, I got this much profit, this much profit. But how you planned, what is your entry, what is your stop loss? I am not supposed to ask you. And also I am not supposed to tell my trades also. Because I am not, I am not a SEBI registered. Whatever I am showing, expressing here is only for education purpose. I cannot give you the recommendations. But what I can do, I can evaluate the performance of previous because the data is already happened, trade is already happened. That I can evaluate, nothing wrong in that. We are evaluating for learning purpose and also checking the performance of our software. Here my goal is how NeoStock software is working because we identified a special zone called high liquidity zone. Are they really working or not? How many opportunities they give? That is what I am registering in this Excel sheet. These are all the opportunities given by the NeoStock software. But have you utilized these opportunities? That is up to you. Did I utilize these opportunities? That is up to me. Definitely I would have taken few trades from this list. Definitely I would have omitted some of the trades from this list. On a particular day, I may not be available for the trading. I might be having busy with some other work, my personal work. Some days I am working during night times and sleeping during morning hours. At the time, I may not be in a position to trade. I may not be in a position to utilize these opportunities. They gave the opportunity, but I didn't utilize. It's not the problem if I don't utilize the opportunity. It is not the problem with the software. It is problem with me. Exactly the same way, if you are not utilizing these opportunities, it is not the problem with the software. It is a problem with you. Why you didn't utilize? You have your own reasons. I am also having my own reasons why I am not utilizing in certain days. Sometimes narrowly we miss the trades. By the time we place our order, market might have slightly missed. Previously, one stock it happened, I missed a trade with 5 paisa difference. Just 5 paisa difference. I would have kept my order 5 paisa below, I would have got the trade. That is what happens sometimes. If you miss the trade, that is not the problem with the software, NeoStock software. It gave you the opportunity, but we missed it. But why we are maintaining this Excel sheet? To check the performance of our software. Because it is a new concept. People need some time to start believing the software. Okay, by the time it reaches 200 trades, definitely you will start believing. After reaching 100 itself, you started believing this software. Why every month I am showing you these results? Every month, starting from October ending onwards. October results we have seen on November 1st or 2nd. Every month I am showing you these results. Every month I am uploading this Excel sheet at our Telegram channel. Apart from that, important milestones like 100 trades, 200, maybe again next time 300, that is a triple century. Those important days again I will be publishing. Because continuously, at least 6 months we should monitor. 6 months data is a well-proven data. 1 year data means it is an amazing data. Next 1 year I will be maintaining this Excel sheet. Because in all kind of markets, we have to see the performance. All kinds of markets. See, this is the month, February month, budget month. During the budget month, what is the performance? I have seen some slowdown in the trades. Profit margins are not up to 6.1%. Some 1% below I have seen. Number of trades also reduced. Executed trades reduced during this February month. That gives an idea in future during the budget days how the performance will be there. Next election season will be coming. We have to test our software. We have to check during elections time how the performance of our high liquidity zones. In all the conditions, if high liquidity zones are working, then it is a well-tested and well-proven strategy. By this time, already it gained its importance. But still, even this strategy we have seen in bull markets as well as bear markets also. In bull market, our short trade worked very well. Bear market, long trades worked very well. That is what we have seen. Anyway, bull market, long trades will work. But in bull market, for our short high liquidity zones worked very well. We got very good profits. Same thing we have seen bear market also. Bear market, long trades worked very well. Anyway, bear market, short trades work by default. But reverse also worked. That means our high liquidity zones proved in different kinds of markets. Still, it is yet to prove in some other scenarios also. That is the reason behind maintaining this Excel sheet. It is not about telling these are all my trades. How can I take 3 to 4 trades in a single day? It is impossible for me, same time. Because some people asked this question. It made me laugh. Please don't trust me too much. They're thinking all these are all my trades. At the same time, it is my responsibility when you are started pricing which I am not supposed to take. I have to accept. That's why I am telling you. All these are all not my trades. I don't want to get credit for that is not really deserved for me. This is the credit not deserved for me. This is the credit for NeoStock software performance. This is not the credit for Pratap's trades. Please remember. But you are giving the credit to Pratap, my trades. You have to give the credit to NeoStock software. These are all the opportunities provided to you, NeoStock software. When it provided you these many opportunities, how many utilized you utilized or how many I utilized? That is depending on you or depending on me. But the point you have to understand, NeoStock software is providing very good opportunities. In these opportunities, how to plan our trades? That is by fine-tuning the zone. How to fine-tune the zone? I already explained in lesson 16, 16.1 and 16.2. That is zone confluence. If you take NeoStock high liquidity zones and if you understand lesson 16 properly, both together they will give you very good profits. I repeat, lesson 16 concepts and our high liquidity zones, daily high liquidity zones and 75 minutes high liquidity zones. Combine both will be an extraordinary concept, is an extraordinary concept. And NeoStock high liquidity zones is an automatic work. Software will analyze the data, give you. And fine tuning the zone, lesson 16 concept, manually you have to do. That is very simple. Every day I am explaining you. Every day how to fine tune the zone. What is that I am doing in everyday analysis videos? Just showing you how to fine tune the zone. Sometimes fine tuning the zones are little tricky. Why I am saying little tricky? Because some areas you need to slightly take deviations from our theoretical concepts. If you apply theory concepts as it is 100% accurate way, you have to do. But sometimes we take slight deviations. We compromise. That is the right word. Sometimes we compromise and draw the zone. Which level? 5 minutes and 15 minutes level. Above 15 minutes, we don't compromise. At 15 minutes or 5 minutes level, sometimes you compromise. Even leg out is also not great. You will accept that as a zone. That way you will compromise. Sometimes. When to compromise, when not to compromise, that experience slowly you will get. Once you start fine-tuning the zones, you will get clarity. That's why I'm showing you everyday analysis videos. Hope you got the clarity. This is the answer to your second question. Those people who are thinking all these are all my trades. So as a summary, these are all not my trades. These are the opportunities provided by the NeoStock software. Those are whatever the opportunities it is provided, those opportunities are executed on the charts. Executed on the charts. You might have taken a trade or not taken a trade. That is a different story. But trade is executed on the chart. Whatever the trades executed on the charts, that is what I am mentioning in this Excel sheet. I am not mentioning my trades. See, for example, today I would have taken this trade. Now I'm not telling I have taken. Maybe I would have taken. But am I mentioning here? No. Why I am not mentioning? Because that is not a high liquidity zone or trade. In this Excel sheet, only high liquidity trades executed on the charts I am mentioning here. If you would have taken the trade, this is the profit you would have got. If you would have taken this trade, this is the loss you would have got. That is what I am telling you. And one more person asked a question. He was thinking that all these trades I have taken, and one day 3 stocks got executed at the same time. How you took all the 3 trades? How you managed all the 3? That is the question he asked me. First of all, they are not my trades. I can take maximum 1 trade only. I can't concentrate on the 3 trades. Still there is a solution if you want to concentrate on the 3. Maybe you will ask one of our family members, look into that another stock. And when you are placing a trade in this stock, your other family member will be placing a trade on the other stock. That way you can plan. See, you need manpower. At the same time, 3 stocks, same time, if you want to take 3 stocks, you need manpower. You alone can't take. By the time you place your first trade, other 2 might have been executed. Or if you want to take 3 trades, you need to place pre-orders. Before price enters into that zone, you need to place your order. That way all the 3 trades will be executed. That is also possible. Cash trades, it is easy because our charts are analyzing on the cash trades. It is easy because you know what is the exact price. But futures, the problem is what is the there is a difference of the premium cost. If you want to place your order exactly, you need to wait till that time. Hope you got the clarity. And now let me get into your other questions quickly, so that after that we will get into the analysis discussion. During the analysis discussion, again I will show you with the help of comparing futures charts and as well as equity charts. But before that, let me complete the other questions. And then I will explain the other 2 trades executed today. Actually 3 trades executed, 1 is stopped out. Let me quickly go through the questions, otherwise the video length will increase. Sir, how to take position in a high explosive rally candle? Because we see immediately drop candle and miss the catching of this candle. Can we identify the lower time frame? Actually, how I understood this question is, he is asking when there is a explosive candle, he want to participate in that candle. But generally the problem is, after price action completes only, you will be knowing that is explosive candle. After that, price action only. During the price action, how do we know that it is going to be explosive candle? We never know. That's why I have given this explanation to him. How do you know it is a high explosive rally candle? Unless the price action complete. For planning your trade at lower time frame, at the candle formation, will you be in a position to predict the future that it is going to be a high explosive rally candle? Or even if it is going to be a leg out candle, it may not be leg out, may go up, all of a sudden it will come down. So that's why I'm saying we cannot, right? After completion of the price action, by seeing the high explosive leg out candle, our mind always says, what our mind says? I should have participated in that candle. Then I would have got a very good profits. That is how we think. But by the time price action is completed, we can't get back to the past. We don't have a time machine. But it is a wrong way of thinking, just because what would have happened if you participated in the trade. Assume your trade is at lower time frame in a candle. Assume that candle is a higher time frame by thinking the higher time frame candle is going to be rally candle, but later it turned out into failed ERC candle. What is the meaning is, suppose you are assuming prices are going up, you are assuming it is going to, because previously a leg candle is there, base candles are there, now prices are started moving up, you are thinking that this is going to be a leg out candle, a rally candle, you might be thinking like that. So that's why you thought like that and you took a decision, okay, let me take an entry here in this candle. Maybe at 1 minute zone or maybe 5 minute zone, you took an entry. But later on prices went up and it looks like a explosive candle. Now you are happy. But all of a sudden what happened? It turned out into failed ERC candle. All of a sudden, very fast, prices are fell down, and hit your stop loss and further came down. Now what happened? Whatever the rally you are expecting, all of a sudden that changed. Failed ERC. That's why, especially in our training lesson 1, I think lesson 1.3, if I am not wrong, I have explained about failed ERC candles. Those people who early participate in the leg out candle during the leg out formation, those people who participate, they get failures if it is a failed ERC candle. But how to participate in the leg out candles? If at all, if anybody, some people may think. There is a concept called confirmation trading. That is what I have explained in the next. But there are concepts like confirmation trading technique might help you participate in the lower time frame trades. But higher time frame, a rally candle is forming, lower time frame we participated. The confirmation technique has given permission for us to take the trade at lower time frame, not higher time frame. But that time of your participation in the trade, the trader may not be knowing that it is in the higher time frame, a leg out is forming. In the confirmation trading, you take trades in the lower time frame. At the time, we may not be having awareness that currently a leg out is forming. Maybe a leg out might form, you might be knowing that. Currently it is forming, you may not be knowing that. But you will come to know only after the price action only. At the time you feel whatever the confirmation trading you participated, that turned out into a good rally. By seeing the higher time frame candle, you will realize. But first you cannot predict, definitely this candle is going to be a rally candle. You cannot predict that. That's why I participated in this trade. You cannot tell that. You never know what is going to happen there. Confirmation technique is a different technique. During the trend changes, you will participate at the lower time frames. Later on, the lower time frame trend changes will make higher time frame also trend changes. Unless you understand this technique, you won't get clarity. It is not easy for me to provide oral explanation. That I will explain later. And the next question. It's good to know about failed expanded range candle. Thank you, sir. You are most welcome. Next question. Your explanation is so good, even grade 1 child can understand. Hats up to you, sir. Please continue. Yeah, thanks for your comments and encouragement. Thank you. How would I reach you? I want to join the course. You don't require to join the course. It is a free course. All the training lessons are free. You don't require to join anywhere. Directly you can start attending. You can go to the playlist. Supply demand zone price action course playlist. Click on the playlist. Any video, if you go to the video description, you will find the link to our training. Any video you open in our YouTube, you will find the link to the playlist. Click the link, you go to the playlist. All the training lessons you can go through one by one, starting from 1.1. And my contact, I have given at present, I have given permission to reach me on my LinkedIn account in our Telegram channel. And somewhere in 1 month back, I think if you go through the messages, past messages, one of the messages I have given Telegram, my LinkedIn ID. My LinkedIn ID. You can reach me there if you anything if you want to, but mostly not required. In case if you have any questions, you can put there, or you can put in this comment section, or any personal question you can't keep in this comment section. You can post them in LinkedIn. Only I will be able to read your message. Same or different? Well, I am very much interested with the way you are analyzing and explaining the things, because I do same type of analysis and I want to upgrade my knowledge. I want to learn from you. Okay, thank you. So please go through all these free training lessons. This is a complete training. I am not excluding any concepts. There is no paid courses with me. First of all, I don't like the paid training for stock market related analysis. My only goal is just to sell my software. That's it. Looking for a buyer. Maybe I would have, some people suggested me, go for a paid version, paid subscription for the software. But the reason why I didn't go for that particular option is, if I go for that option, my setup cost is more than what the amount you are going to pay. So that give me losses. So that's why till I find a buyer for this software, I'll be providing you free. Or if there are any other options available future, I can go with the paid subscription related for software related services. Training, I am not interested for any paid services. How can I get this software? See, first of all, you should know about, before asking this question, you should go through Q&A-1. We have a playlist Q&A. In that Q&A, please go to the first video. The question, for your questions, you will get the answer about how to get the software. And these are the questions yesterday. Great achievement and dedication. Accuracy level, thanks for providing such information. Okay, thank you very much. Thank you, Manas. And the next question. Hi Pratap ji, the analysis speaks that all these trades you have taken. See, I didn't take the trades. That's why yesterday, by seeing this message only, I decided I want to stop this kind of understanding from most of you people are asking. I don't want wrong credits. Please remember, definitely I take credits if that is my contribution. If it is not my contribution, I feel shame. I feel shame to get the credits. That is my mentality. I don't like to take wrong credits. Right credits I accept. So that's why in the Telegram yesterday I have given a message. I saw your message around night 10:30 or 11 o'clock. Mostly I don't like to put messages after 10 o'clock at Telegram channel. But this is a very important message. I thought it's okay. So I replied in the Telegram channel. Because I want to stop the other people who are thinking exactly the same way. Whatever the Excel sheet is having, these are all the opportunities provided by the NeoStock software. They are not my trades. My trades, I never talk about them. Okay, thank you, Akil Kumar. Clear and concise. I think this is trend-related concepts. Lesson 8.1, E1. E1 means extension 1. Actually, this is the trend concept everybody must go through. There are nearly 3 or 4 videos are there. The trend calculation based on higher highs and higher lows. It is essential for everybody to learn. One reason is not only for learning the trend related. After learning this concept, your mind thinking levels also will change. And these concepts actually they are the roots for understanding the price action concepts. These higher highs, higher lows, lower highs, and for understanding the price action, price structures, to understand the market direction movements, to understand whatever the concepts I explained in the trend calculation, they will be helpful to you. But these are all the big lessons, almost like 1 hour or 1.5 hour lesson. So with the patience, you have to listen the videos. I think nearly 4 or 5 videos are there, including one live chart analysis for Nifty and Bank Nifty. What I have seen, many people skipped these videos. How can I, you may ask, how can I say? The reason is the earlier video, first video is having a very good views. And his extension videos, you skipped maybe thinking, maybe these are all small topics. The first video is 1.5 hour. Maybe you would not have gone through this entire 1.5 hour in that video. That's why I'm telling, with dedication, patience, you have to listen. Because they are basic concepts strengthening your fundamentals. These concepts will make you become a very good trader in the coming days. That's why I insisted everybody must go through the trend analysis, the 4 or 5 lessons, whatever is there. In that lesson 8, whatever the number of lessons are there, every lesson without missing single line, you have to attend. And next one, thank you, Pratap. Thank you, Mohanty. Ashok Singh commented here, Mr. Pratap, when third phase of training will start. That is after completing second phase. I think we have 2 more lessons pending in second phase of the training. After that, I will start. But third phase of the training, before I start, I should ensure all you people practiced good enough. Earlier, I told you how to attend these lessons. Actually, this is a very important thing for even freshers and even experienced persons also. Why experienced persons? Because many new concepts during our training program you are learning. Even though you learned somewhere, they didn't teach you certain important concepts which I covered in my training program. Every lesson, at least you will learn minimum 1 point, new point. Minimum 1 new point. Some lessons you may learn maybe some 20 or 30 new points you will be learning. Every lesson you will learn. Those points are very important to strengthen your fundamentals, strengthen your, to fill your gaps. While learning, everybody will have some gaps. I try to address how you can fill those gaps in all these training lessons. And moreover, for beginners, you know what you are doing? Continuously you are going through all the lessons one without any break. You need to give some breaks in between. Especially after the first phase of the training, I expect you to give at least 2 to 3 weeks break before getting into lesson 11. First phase of the training is completed at lesson 10. After that, give 2 to 3 weeks break. And what you have to do this 2 to 3 weeks break? Whatever you learned, all the concepts you need to apply on the charts. Take paper trading. Every day you trade next 2 weeks, but not on the real, only paper trading. And see where you are making mistake and check what kind of trades going to be failed. When your trades are failed, observe them. Some trades definitely it will fail when you are trading based on the phase 1 training program. Because certain concepts that you are supposed to learn in phase 2, second phase of the training program, without knowing that knowledge, if you take trades as per first phase of the training program, definitely some of the trades will be failed. And if you practice when you are learning the second phase of the training program, you will understand. Okay, this is the reason why my paper trade is failed. Or maybe this is the reason why my another particular trade is failed. That kind of clarity you will get when you are learning. With that clarity, if you are learning second phase of the training program, then your learning will be practical way. Without giving any break, continuously you are learning everything. The first phase, again directly jumped into lesson 11. And if you are learning, probably by the time you reach lesson 12 or 13, you feel heavy, very heavy. And it is very difficult for you to digest all those concepts. But when those who learned, first time when I am explaining, I am releasing the videos, I gave 1 month break to them. After that only, I get into the second phase. They got enough time. They practiced enough. And I haven't seen any questions from them during the second phase of the training program. Maybe 1 or 2 questions they asked. They are all small things related to the subject. But they didn't feel heavy. And today they are about to complete second phase. Already now they got enough skills required for trading purpose. The only thing is some more practice they required. Whatever the concepts they learned. Because all the concepts they should remember in their mind. So some practice is required. After that, whatever I explain in the third phase, you will be in a position to understand. And third phase is not like a regular training program. It is there more like strategies. Of course, some concepts also will be there that is required for learning certain strategies. So after explaining using the strategies, some days you need to practice. So that's why third phase of the training, there are a lot of gaps will be there. It's not like releasing a video regularly one video on week or two videos on week. It's not like that. Maybe sometimes we may take 1 month time. After that only, the next lesson we will get into that. They are not the lessons, they are the strategies. We are learning different kinds of strategies. Once you feel comfortness about one strategy, then only we have to get into the next strategy. So that's why whenever I feel like, okay, this is good enough, maybe you got enough practice. Practice means it's not practice in the real-time implementation in the live markets. The strategy you have to implement. Then I can move on to the next one. If I am teaching the strategies just like lessons, mostly again you feel heavy. I don't want you people struggle for 3 years and realize still I need to learn some more. I don't want you people feel like that. You struggle for 6 months, learn everything. After that you should feel like I'm an expert. That's why I have chosen the second method, not the first method. What outside I have seen everybody when they are learning, you people learn the concepts, you feel like, okay, I learned everything. But even after 3 years also, you are struggling to find the right trades. That's why I changed the mechanism. You struggle for first 6 months. By the time you complete 6 months, you feel you are comfort with. You feel like you are an expert. You feel like whatever I am doing, I means Pratap, whatever Pratap is doing, same thing I am also doing. That is how you should feel after 6 months. So with that objectives, I am providing this training. And while learning also, you should learn like that. Because the ready-made lessons are available on my video lessons are available. That's why you should not feel like learn every 6 months, whatever you are supposed to learn. You should not plan like to learn everything in 1 month itself. See, all the recorded videos are available. This is one disadvantage. You won't give breaks. Continuously you want to learn, but you won't practice. That's why you must, anyway, I will make a separate video in the future after completing second phase about how you have to learn the concepts, where you need to give the break. I will explain. Now I am explaining everything orally. With the PowerPoint presentation, I will explain. Okay, now let me move on to the next question. Sunny, thank you, Sunny. You liked and subscribed. Thank you very much. Generally, I don't like the people in general ask like my videos, subscribe my videos. I generally I don't like that. That's why none of the videos I requested the people. It is up to the people. Few people like the videos, few people subscribed. Not everybody watching the videos are not subscribed, but still I don't like to ask them. But you yourself came forward and informed me. You liked and also you subscribed. So definitely I should convey my wishes to you. Thank you very much. And next, Muhammad Hussain commented, please confirm if these lists are valid only. Yeah, I think this is the last question we answered in our, this is the first question we answered in the last Q&A session. That means still this question we have addressed in the last Q&A. And the answer is yes. That is what I said. Especially stocks near demand and supply zones. I'm talking about high liquidity zones, only high liquidity zones. Whatever the high liquidity zones generated in today's report, they are valid only in the next trading day. If they are not executed, leave them. Tomorrow, whatever you are generating, again our software is generating, use only them for again on the next day. That is the only way we have to plan. Actually, some stocks you can take, we can consider them, but I don't want you because you don't have enough exposure to understand which stocks you can further carry. So that's why I'm asking you focus only the today's stocks in the next day's trading. Today's stocks means today's high liquidity zones, the daily and 75 minutes high liquidity zones. Currently, we build the strategy only for daily and 75 minutes only. We build a strategy, trading strategy. That is fine-tuning the zone. And remaining time frames we haven't tested. But these zones, they are working very well. Success rate is good, more than 80%. And ROI during intraday is for each stock 6.1%. Excellent statistics there. What else we need as a trader? Nothing more than that. So these are all the Q&As. Now let us get into sorry, what is the name? I forgot. Yeah, let us evaluate the performance of our yesterday's high liquidity zones. But in that, once again, I will explain how we have to compare equity stock analysis on futures, how to take trades in the future. In all the three trades, I will be showing you. Because one stock is stopped out there also. How we got when we need to exit in the future stock. That also you should learn. First, we will take ACC. ACC is a 75 minutes stock. Actually, it is a daily stock. Inside daily high liquidity, 75 minutes high liquidity is there. Daily is a high liquidity. 75 minutes is also high liquidity. And yesterday our software spotted this stock at 75 minutes time frame. This is a very old stock. Old zone. In 2022, this 75 minute zone is created. This is the one. We have a rally, 1, 2, 3, 4 base candles and a drop candle. And recently, prices entered into this zone. And again, a new 15 minutes is created inside this, newly entered. Now, let us focus on those newly created zones. Going to the 15 minutes time frame. In the 15 minutes, we have a rally base, drop base drop. In the drop base drop, we created one 5 minutes zone. We have drawn a 5 minute zone. Next again, we have a leg-in candle. It's not leg-in, actually, this is a rally. 1, 2, 3, 4, 5 base candles and a drop candle. Rally, because all these candles are within this area. Rally, base, drop. This is the 15 minutes. In this 15 minutes, we fine-tune to 5 minutes. And inside this 15 minutes, we identified two 5-minute zones. And inside this 15 minutes, we identified only one 5-minute zone. How we have drawn here? This is the top one. We have a drop candle. Even this also you can consider as a leg-in candle, because compared to the other candles, this length is a little bigger, so that way considering. Or you can also consider these three as base candles. That is also okay. But I consider this is a leg-in, that is good enough. These two base candles and a drop candle. That's what I told you earlier. Once your experience grows, sometimes you compromise and draw the zones. You won't look for 100% accuracy. See here, generally you say, this is a drop, 3 base candles and drop. But what I did, some level I compromised. My experience or my sense saying, okay, not required this entire candle. This candle you can consider as a leg-in. Maybe this length is good enough to consider it is a leg-in compared to the other candles. At least it is having 50% body, above 50% body, a little above 50%, and range is also a little higher than the average candle you consider on 5 minutes time frame. This is how I felt and I have drawn. Most of the times what I felt, it will work. How? Because that is what experience. That kind of level you will also reach slowly. Nothing to worry. Now timing, whatever you land 100% accurate way you analyze this, you consider this is a drop. This is also you consider as a base candle, 3 base candles drop. What I did, I have given some relaxation here. I am considering this as a leg-in, 2 base candles drop. Does it make any difference? Not much difference. Only our risk level calculations. Some changes you will see. And because of this kind of consideration, a small amount of risk reduced, small amount of risk. If my analysis is not proper, what happens? Sometimes price may not get into this zone, I miss the trade. But I have confidence that next time prices enter, probably it will reach. The reason is I'm seeing a gap here, small gap, pro gap. That means strong order flow will be there. In the pro gap area, I can plan my trade. Because I observed these small things and then draw the zones. That's why, at some extent, slightly compromised in finding in the especially leg-in level, I compromised. That is okay. See, initially when you follow the rules 100% strict way, once your experience grows, where you have to give relaxation to your rules, you will understand. That point you have to understand. But I do such kind of relaxation only in 5 minutes and 15 minutes. Remaining all zones, strictly I follow. If this would have been a daily zone, I would have considered this is a leg-in, these three base candles, if it is a daily zone. And this is the second 15-minute zone. In this again I identified two zones. We have a rally candle, two base candles and a drop candle. And here also see there is a gap, pro gap. Probably more strong orders will be there. Again drop, two base candles and a drop candle. See today what happened? Prices today at 9:15 candle. It's not exactly 9:15, around 9:17 or 9:18. Prices came close to this zone. Just 2 rupees difference for the fine-tuned area. Most of the time what you do, you keep some 2 rupees before or 2.5 or 3 rupees maximum, you will keep your trade. Because within 1% you add buffer. Because this is a 2,600 rupees stock. Definitely 2 rupees 60 paisa buffer you will add before this. That way this trade would have been executed. If you placed your order exactly strictly at the digital line, you might have missed this trade. But I am considering this is an opportunity given by our software. That is what you have to understand. Please remember, this is not my trade or this is not your trade. What I am saying is these are the opportunities our software has given. That is what you have to understand. Why we are adding buffers before? Because in high liquidity zones, the liquidity is very high. Just before reaching, probably the prices will be pushed down. Some people may feel this is high risk, they will leave the stock. Even if I feel, say for example, if this risk is not within my management, what I do? I will leave. I will wait until prices enter inside the zone. Otherwise, I miss this trade. But our software point of view, how you have to understand, it provided an opportunity. Whether you utilized the opportunity or not, that is a different story. It provided an opportunity, a trading opportunity. If you would have utilized, you would have got a profitable trade today. So this is a trading opportunity here. And reached the 15 minutes target. Let me go to the 15 minutes time frame. See here, we have a rally, base, rally candle is there. After that again a drop, again go through. Okay, it's not very clear, but okay. This is a zone, valid zone. Because in targets, you don't look for a perfect zones. That is the area. And moreover, this is a big target from here to here. And finally, it reached the target. Okay, now your question is, how to plan the trade? Finally, last 15 minutes, you know what happened? This zone is pierced. It is pierced. Why it is pierced? Because, see, actually this is a LOTL concept. You have a 5-minute zone, a small gap, another 5-minute zone within the 15 minutes area. That means the order flow will be there, mostly this entire area. By the time it consumed all the pending orders and this entire demand is consumed, no more demand, and the pending orders, see how it pushed. If there is some more time, further prices would have been gone down. This happened during only last 15 minutes of our trading. Anyway, last 15 minutes we don't take trade. That is a different story. But here it gave an opportunity in the morning. Okay, how to take this trade? because we are analyzing equity stock, but you want to take a trade in future stock. I already gave in NIFTY. In case if you didn't understand properly in NIFTY, please concentrate here. You will get better clarity. So at what time? Around 9:15. Let me go to 1 minute chart to get the clarity when exactly we got the trade. See here, multiple candles we got the opportunity. In this candle, next candle, next candle. In one of these candles you would have placed. Morning 9:17, morning 9:18, morning 9:19. 3 minutes continuously we got an opportunity here within this area. You would have, if you would have added some buffer here, buffer. How much? 2 rupees buffer, only 2 rupees. Just before entering into this 5 minutes area. Let us assume you decided to plan a trade here, somewhere here. What is the high of this candle? 2680. Let us assume around 2680, maybe 26, even below that, 79.50 paisa. Like that you would have kept your trade. Okay, approximately 2680. Let me plan. I'm opening a calculator. 2680, you want to buy your short trade. That means you are going for a short trade at 2680. But is it the same price in the futures? No. Futures prices are always having some premium value. Because of the premium value, there will be some difference. There will be some difference. So what you do? You go to open the futures chart. I'm opening ACC futures. So at what time we are planning our trade? Let us assume at 9 o'clock 17 minutes. In 9 o'clock 17 minutes, this is the candle. This is the candle, 9 o'clock 17 minutes. Two 2685, some 25 paisa, something is there. Let me give some rounded value. 2685. I am giving round value 2685. And the second calculator is for futures. 2685. See here, in equity, the price is 2680 at 9 o'clock 17 minutes. At same time, this is equity, not futures. 2680 is at equity at 9 o'clock 17 minutes. Exactly at the same time, in futures chart, the price is 2685. That means there is a 5 rupees premium between futures and equity. Because of this premium value, some differences will come. While getting profit also, you may not be exactly the same, but near to the same you will get. Near to the same. Maybe a difference of 2 rupees or 3 rupees. Because at the time of reaching target, the volatilities will change in the market. Because of the volatility conditions, premium value also slightly increase or decrease. Due to that, you may not get exact profit what you are getting on equity or futures. But near to that you will get. There is a small difference, not huge difference. See, always between futures and options, between futures and equity, the profit margins, final profit margins, you will not see more than 0.5%. Even less than that. 0.5 is also extreme level. You will say minor level, minor level. Excuse me. Okay, now you have seen how we are buying. Equity is saying 2680. The same time, the same candle, if you look into futures, it is showing a different price. You take, because this is the one equity you analyzed. This is the price it is suggested. At the time, future is having a different price, which is equivalent to equity, that is the way you have to assume. Even though there is a difference of 5 rupees, you have to assume that is because of the premium value. What you have to assume? 2680 in equity chart is equivalent to 2685 in futures chart. That is how you have to feel. You should not feel, here is a different price, here is a different price. You should not feel like that. You did your analysis at equity chart. As per that analysis, current price for future is 2685. According to your analysis, the prices will go down. Future also the prices will go down. See here. Compare both the charts. Here prices are going down. And here also prices are going down. Now you will get clarity. This is morning 9:16. This is morning 9:16. See here. Now compare both the charts. Equity prices went up. Equity prices went up. Futures also prices went up. Now after 19 candle, prices are started coming down. Equity also, the prices are started coming down. Up to 933 candle. Here, up to 933 candle. From 944 candle onwards, prices are moving in equity. Futures also, from 934 onwards, the prices are started moving up. Again, when prices are started moving down, from 949 candle. And here, see 949 candle, prices are starting going down. That means whatever the trend is followed in equity, same trend will be followed in futures also. But what is the difference? There is a difference of a premium amount between future stocks and equity stocks. On equity stocks, some premium will be added to the futures. Sometimes the premium could be towards the positive side, sometimes premium could be even towards negative also will be there. Equity chart, more price will be there, future chart price will be less. Sometimes you will see that also. Why the difference? Because of changes in the volatility. Volatility will be calculated in F&O segment, in futures and options, both volatility will be calculated. But what about in equity market? Equity market is not driven based on the volatility. Equity market, the prices will be driven based on the demand and supply. Because of these demand and supply, volatility conditions will arise that will reflect in the futures and options market. This is the important point you should understand. That's why always you see a premium amount difference between equity and options, but otherwise the direction will be same. Okay, finally when it reached the target, here it reached the target at 1140 candle. Okay, what is the price, target price? The round value I am adding 2636 minus 2636. 2680 minus 2636. Now let us check even in and which candle it is? What time? 1140. Now let me go to 1140 candle. See, this is the one. 1140 candle. In 1140 candle, almost the low of this candle. Here also check, give the value the low of this candle at 1140. What is the low of this candle? 2643.30. Let me say round value 2644. And let me give the exact value 2643.30. So minus 26, what is the value? 2643.30. This is at the futures. And this is equity. Now see the difference? Now equal to, you got 44 rupees profit in equity. And how much profit we got in futures? Futures also near to 44 you will get. Maybe 1 rupee or 2 rupee difference will be there, not more than that. 41.7, that means close to 42 rupees. Here 41.7 rupees profit you got in futures. Equity 44 rupees. Okay, the small amount, the negligible amount, you can what you can say, that is negligible amount. You can ignore that. The 1 rupee, 2 rupee differences. But almost close to this, whatever the amount you got here, here also you got. So if you would have traded in futures, you would have got 41.7 rupees profit. Close to 42 rupees profit. Okay, now, sorry. Okay, this is a futures. So this is our actual profit. So how much profit we got in ACC? So go to margin. Let me reset. You got 300 rupees. The net quantity. The lot size is 300. It's not 300 rupees. It is the lot size. It is 300. So for each stock, for one stock 41.7 profit into 300. So you got 12,510 rupees profit. This is your actual profit in futures. Now what you have to do? Calculate ROA. Before calculating, generally what I do every day, because this is the opportunity we got, whether I traded or not, this is not the question here. Our software has given. Whatever the software has given, these values every day I am telling you, because I already calculated. Every day what I do, before starting the lesson, today I want to explain you everything, that's why I didn't do any calculations part. Now, in the live session I am calculating. But what every day I am doing, I want to show it to you. I open the Excel sheet. In the Excel sheet 201, this is a new trade. This is yesterday's report. Yesterday we generated the report date. Yesterday we identified this high liquidity zone. And today in this high liquidity zone we got a trade. What is today's date? 22. So this is yesterday generated rate and today our HLQ trade date. HLQ trade date means it's not my trade. It is the software opportunity, whatever it has given, that opportunity is executed today. That executed trade you have taken or I have taken, that is a different story. But it is given a trade. Whoever took this opportunity, they all would have got profit. How much profit they got? This is the one. 12,510. But before that, what kind of trade it is? Is it a long or short? It is a short trade. How much profit we got? 12,510. Okay, ROA. How much ROA we got? Again, go to this. What is the margin cost? 1,61,987. Maybe it would have been slightly different at the time of taking trade. Maybe it could have been 1,61,000, some 560 or 570, because prices moved slightly these values. But this value change is negligible, not significant. But we are calculating rough calculations. Exactly at morning 9:15, when you have taken trade, what is the value? It is very difficult to find that value. Maybe if you would have taken a trade and you would have noted down at that time, that is a different story. So while calculating, okay, 12 this is the profit, 12,510 into 100 divided by 1,61,987. That means close to 1,62,000 rupees is your investment. That is the margin cost. If you want to take a trade in one future, this is the amount you have to invest. On your amount invested, how much profit you got? That is what? 12,500 into 100 divided by, 12,510 into 100 divided by 1,61,987. That equivalent to 7.72% profit you got. That means 7.7. I am rounding to one digit. 7.7. So here I go to Excel sheet, I will enter 7.7. This is the ROA. Every day what I am telling you, when I am explaining, after explaining this, here I have to write stock name ACC. Every day in the analysis discussion, after explaining how I fine tune the zone, I will be telling you, ACC has given a profit 12,510, which is equivalent to 7.7% ROI. These details I am providing. What kind of zone it is? It is a 75-minute zone. In the comment section, I am adding here. If it is any special trade, aggressive trade, or if it is any 5 minutes is also high liquidity zone, I will add some more extra information here to know. Because these are all things I am maintaining to check the performance of our software. And is it a true trade? Yes, it is a true trade. It has provided an opportunity. Have you utilized this opportunity? That again depends on you. Because you need to add 2 rupees buffer before the zone. If you add that buffer, that risk, whatever risk, are you in a position to manage or not? If it is within your management level, you take a trade. If it is not, you won't. Because even though maximum 2% risk, some people accept only 1% risk. Those people can't take this trade. Maybe this trade is within 1.5% level. Those who accept 1.5%, they will probably would take this trade. They would have added the 2 rupees buffer. Because generally we add 0.1% buffer before that your entry zone. So it is a perfect trade today. But what we are registering in the Excel sheet is the opportunities given by our software. Those who utilized this opportunity, they got a good profit today. 7.7% return they got on their investment today. So this is about ACC trade. Next, what is the next opportunity we got today? The next opportunity we got in POWERGRID. Let me open the POWERGRID. POWERGRID is a 75 minutes or 75 minutes high liquidity zone. High liquidity demand zone. We have a drop. We have 1, 2, 3, 4, 5 base candles and a rally candle. This is the POWERGRID. Generally what I do, after I generate the reports, I will record the video. After that, I will open one by one stock. I will start to analyze this stock, fine tune the zone, and I will keep it ready for tomorrow. This is how I do. First, I will update the data, today's data in my database. Then I will generate the reports. While generating, I will record the video and I will publish in the YouTube for our reference purpose. After the daily zones and 75-minute zones, one by one, I will take whatever the software it has given, the login, how many base candles it has. In the report, we will see 5 base candles. What is the date? So exactly on that day, between these 5 candles, I will draw the zone. This is a 75-minute zone. After that, what I do, I will go to 15 minutes time frame. In the 15 minutes time frame, I will draw these 15-minute zones. So here we have a drop candle, 1, 2, 3, 4 base candles are there, and we have a leg out candle. This is the way I have drawn the 15 minutes. There is no special skill. You already learned. You will also draw the same. Next, after that, what you will do again? You will draw a drop, a base candle, again a rally candle. You are seeing clearly. Once again, you will draw a zone here. So we have drawn 2 15-minute zones. Clearly, they are visible. Nothing is there to do here. We have 2 zones available. They are not violated zones. They are all active zones inside this. You can also draw drop, 2 base candles, rally. But this is already violated. This zone is violated. You can't draw this zone. These are the active zones. Active zones I am drawing. After that, what I do? From 15 minutes, I will shift to 5 minutes time frame. Now, inside these 15 minutes, I will check the price structure. Is it good? If it is good, not good, I don't draw the zone. I will leave it. Next day in the analysis section, I will tell you, see this in this zone, the 5-minute structure is not good, this zone will be violated. That is what every day I am telling you. Okay, if it is good, in this example it is good. We have a drop candle, we have a base candle, we have a rally candle. See, I have drawn the zone. That's it. Can't you do the same? You can also do the same. There is nothing special. Only technique you have to learn. Inside 75 minutes, we should drop 15 minutes. That is what we drawn to 15 minutes. Next, you have to check. Inside that 75 minutes, you have to draw, inside 15 minutes, you have to draw 5 minutes. If 5-minute structure is good, it is ready for the trade. If it is not tested earlier, that condition we have to add. If this 5 minutes is not tested, or if the 5 minutes is just narrowly tested, at the proximal, but there is a rejection, obviously we will use that zone for our trading purpose. Such kind of zones work. Not always, there are few zones violate. But good number of stocks are working. If that is the case, why should we unnecessarily leave that? That is our intention. Sometimes it is already tested narrowly, just below there is one more zone. In that case, we will give priority to the second one. Like LOTL concept. See, here we have two zones, but they are not LOTL. Because they are not LOTL, even if it is narrowly tested, still we will consider this zone. If there is a rejection is there, if rejection is not there, we don't consider. Rejection should be there. Rejection is an indication that there is a strong order flow. You may ask a question, if rejection is there, is it 100% guarantee that it will work? No. Sometimes they will also fail. The reason is, maybe the order flow is very strong, but that day supply is much stronger than the demand. Then entire supply has to be consumed. By the time this zone consumes the supply, no more pending orders and it will be violated. In that case, below that if there is any supply zone, there are higher chances that the below zone will work. What do? You exit with, your stop loss will be small only, you will exit. Then take a trade in the next one. That way you will plan. That is what we have seen even yesterday also it happened to us like that. In PNB yesterday, one stock we got a profit, another stock we got the, in first stock is stopped out, first zone, next zone we got the profit. Excuse me. So this is the way we have drawn. Similarly, exactly the next below 15 minutes, we have identified a 5 minutes. We have a drop candle, we have a base candle, we have a rally candle. Rally candle low is the distal line and proximal is at your 5-minute zone. If you feel the risk is very high because this candle is small, still if you want to reduce the risk, you can make it type 3 entry. This is the way also you can draw. Because the body is very small, it doesn't make difference whether it is type 3 entry or type 2 entry. Because it is a very narrow difference. But your risk will be reduced to some extent. That way you get more reward or sufficient RR you will get. If this is a very big body and if you minimize list, there are higher chances that you miss the trade. But here the body is very small, still the risk is big only. You know, what is the technique if you feel this is risk? What is the accepted level? Till the accepted level, you reduce the zone. And there you plan your trade if prices comes into that zone. Otherwise, you will miss the trade. So this is the way we have drawn. And today what happened? The first zone is violated and second zone gave a result. That means second trade. Finally reached the target here. First one is stopped out. Okay, how to consider this? Let me go to 1 minute. Because we should know how to consider the stop loss in futures also. In which candle it entered the zone? 9:15. In which candle it is stopped out? 9:15 minutes only. Mostly you would not have taken this trade. Because 9:15 candle, most of us rarely take the candle. Because 9:15, all of a sudden prices very sharply. Within 1 second, everything would have been completed. Just fraction of a second. But still let us consider this. Because we are checking the performance of our software. Whether you take the trade or not, maybe because it is 9:15, we are saved from this stopped out trade. But according to the software, it is violated. So we have to consider. Within 9:15 level, when prices entered here, what is the price structure in power grid? Let us consider. This is power grid. Today morning at, oh sorry, this is not, I have to check the futures chart. Okay, power grid futures. This is the futures chart. This is 9:15 candle today. See here, probably the open and this is the open. The prices should be same at open. So what is the open? That is your entry, open. 280.35. 280.35 and close, maybe you would have added some buffer also below this. Maybe 274 instead of 95. Let us say it could be 85. 274.85. I am adding 10 paisa buffer here because the cost is at 200 levels. Maybe you will be having a 10 or 15 paisa buffer, not more than that. 10 paisa buffer we are adding. So it would have been stopped out at 274.85. Sorry, this is the close price, not open price. This is the open. Open is here. This is close. That's why I'm saying why huge difference. While closing, that is exactly at the proximal line. That is 275.40 paisa. 275.40 paisa. 275.40 is your entry. Somewhere here. Just a little above this proximal entry. And here 274.90, 270, actually the exact proximal is 275, 274.95 paisa. I am adding 10 paisa buffer, so 274.85. $274.85. Okay. So 0.55 paisa is your stop loss. This is an equity. What about in futures? Futures also morning 9 o'clock candle, probably at this close of this candle is your proximal. What is the close of this candle here? 276.10 paisa. 276.10 paisa minus where we have taken here 274.90, somewhere this much distance, and here also somewhere here the price could have been 275.80 paisa, 275.80. So 30 paisa difference here. Here more, because the movement of the price, see here more price movement in the equity chart. In future chart here, the price movement is a little less. At 275, 70 paisa if you add, still you get 0.4%. So let us say 0.4. If I increase, and here also how much? 0.55. So this is our futures. Now let me add power grid. So 3,600 rupees. So 0.4 into 3,600. You got 1,440 rupees loss. That is stopped out for power grid. So let us add in the Excel sheet. And the trade is long trade. And what is the loss we got? 1440. So what I do? Minus 1440. And what is the ROI? 1440 into 100 divided by 1,81,022. 0.79. You can say 0.8 round value 0.8. So minus 0.8. This is a 75 minutes high liquidity zone. This power grid is a 75 minutes high liquidity zone. Because we got negative, for easy identification, I am giving red values for this values. Next again, power grid. One more trade we took, and this is a successful trade. So now we need to calculate how exactly we plan in futures by comparing from the equity. Okay, when it reached the zone, 15-minute zone, at 9 o'clock 29 minutes. What is our entry price here? 273.85 paisa. Nine o'clock 29 minutes. A small portion of the candle. After that, exactly the same way, let us look into the chart. See, when you are looking into the live market, when prices entered here, you know the exact price. Because price action is completed, roughly I am calculating. That's why small accuracy differences you may see. But in the live market, what you do when prices are entering, exactly same time, future stock also refer same level. Whatever price is there in the future slot, based on that I will place my order. I don't bother about what is the price in equity. What I bother, is it at my or near to my proximal line or not? That is what I see. Prices reached near to the proximal line. At that time, what is the price in my futures chart? I just place my order there. And what is the price in equity chart? I don't bother about it. Because equity chart price is not important to me. Equity chart price reaching to the demand zone or not, or price reaching to the supply zone or not. That is only I will look. That means at this demand zone or at this supply zone, if it is a supply zone, what is the price in the future chart? That is only I see. And whatever the price in the future chart, I will place the order at that price. That's it. So what is the price here? 273.85. That is for equity stock. That is what we typed. And what is the price for futures? That we will see in the future stock. But what is the time interval? 9 o'clock 29 and here also 9 o'clock 29 in this candle. Somewhere here, not exactly, but see the candle, small difference is here, from here to here. So roughly I am calculating here, maybe somewhere here is my entry. And this is a 274.30 paisa, 274.30 paisa here. At this level, 274.30 paisa. $274.30. This is my futures price. At the time, what is my equities price? 273.85 paisa. What is the premium? Around 45 paisa. 45 paisa is the premium for 273 rupees equity stock. Comparing how? See, the premium value is very small for futures. It's not a huge premium like your derivative, options market. Okay, fine. Now we took an entry in the futures at 274.30 paisa, but not 273.85 paisa. 273.80 paisa is at the near the demand zone, just before the demand zone. And the equivalent value is, the equivalent value for 273.85 at futures is 274.30. So at this price you place your order. Okay, now prices will be reaching your supply zone. Now it reached very close. Somewhere here you will exit. In which candle? 14, 2 o'clock 1, 2 o'clock 1 minute. You will exit from your trade. 2 o'clock 1 minute. The high of the candle, let us assume there we exited. So what is the price at futures chart? Exactly you have to look in this minute. The high of the candle you look. 2 o'clock 1 minute, high of the candle in futures. This is the one. 2 o'clock 1 minute, the high of the candle. See, compare the candles also. More or less they will be same. Small differences will be there. See the range of this candle and the range of this candle, almost they are going to be similar. Not much difference. This is 2 o'clock 1 minute. What is the high of this candle? 279.90. But here 279.50. Equity, it is 279.50. 279.50. Let us check again. The high of the candle is 279.50. Assume there you exited from your trade. Generally you exit few rupees below this or few paisa below this. Just 5 paisa difference. Those who are particularly want to price to go inside, maybe you would have got your exit point at this candle at 2 o'clock 33. But most of the time what we do, when prices are nearing to the zone, few paisa, if you ask me, probably I would have exited here itself. I won't wait until this. Somewhere here I would have exited. But anyway, we are calculating as per our software point of view. Let us assume the best value, we will look for the value. The high of the candle 279.50. And what about futures chart? So you need to look at 2 o'clock 1 minute, afternoon 2 o'clock 1 minute. This is the candle, afternoon 2 o'clock 1 minute. What is the high of this candle? 279.90 paisa. 279.90 paisa. So minus 279.90 paisa. Now compare both. This is 279.50 paisa. This is 279.90 paisa. What is the difference? 40 paisa difference. Same thing also we have seen. Entry also we have seen 40 paisa difference. Entry also between these two. Now exit also we are seeing the same difference. Now calculate the value. 5 rupees 60 paisa. Now convert to positive value. 5 rupees 60 paisa. Here also 5 rupees 60 paisa. Just only 5 paisa difference between these two. This is 5 rupees 65 paisa. This is 5 rupees 60 paisa. Just 5 paisa difference. That is because of the changes in the premium due to volatility conditions. Always remember, the premium value in futures will be changing mainly due to volatility conditions in the market. But the price values in the equity market changes mainly due to demand and supply in the market. But of course, in both the charts, prices will be moving based on the demand and supply only. But the demand and supply from equity charts will be reflected on the futures charts or options charts because they are the derivatives of the equity charts. They are derived. Because they are derived, if there is a price changes here, that means the direction. If the market is moving down, here also market will move down. If market is moving up, here also market will move up. But small differences in the prices in futures charts is mainly because of volatility changes. So due to that, the premium values you will see difference. Sometimes premium value is a little higher, sometimes premium value is a little lower than expected value. Excuse me. Okay, now this is the futures. See, almost they're same, almost similar, very close, a small difference. Now hope you got the clarity, how exactly we need to plan our trades, analyzing in the equity but planning in the futures. Now what I am doing, taking the futures value 5.6. Now in the margin calculator already we have POWERGRID 5.6 into 3,600. We got a profit of 20,160 rupees. So 20,160 I am entering in the Excel sheet. And what is the ROI? Into 100 divided by 1,81,022 rupees. You got 11.1% ROI. This is about your POWERGRID, long trade. Still, if you deduct the loss, you got a very good profit. Maybe you would have got around 18,000 or some 600 or 700 rupees profit you would have got. Maybe 18,700 rupees, around that value. That's it. This is the way. See, drawing the charts on the equity, but we are trading in the futures. The only difference what we are doing, the time interval we are taking. Whatever the time you want to buy in equity, at the time, whatever the price is there in the future, that price we are taking and we are doing trading in the futures. We are not bothering whether zone is there or not. Because the zones will slightly change because of volatility conditions in the market. Because of the volatility conditions, if your zones are changing, that is not accurate. The zone should be as per demand and supply. The zone should not be as per the volatility conditions in the market. That is the reason why we are not drawing the zones in futures market. This is the point you need to understand. Hope you got the clarity. Now we have seen all the three trades. I am removing this futures chart also. Now the remaining stocks, let us look into the quickly. Navin Fluorine, already a fine-tuned area. Previously we did this. Navin Fluorine previously means almost some 2 weeks back, if I am not wrong. At the time we have drawn both these zones. The same analysis is here. Today prices did not enter, so we did not get an entry in this. Next one is NMDC. NMDC is a daily high liquidity zone. We didn't plan a trade. We know that this zone will be violated. The reason is, inside this daily we have, is it daily or 75? No. Yeah. Inside the daily we have this 75 minutes, the fine tune. See the structure here. Number of candles, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles are coming if you draw a zone like this. Okay, if you compromise, this is a leg candle, these two are base candles, you will get a zone like this. In case if you compromise. But still, if you go to the 15 minutes, 15-minute structure is not at all good, even more worst. See here, you have a rally candle, 1, 2, 3, 4, 5, 6, 7, 8. So that's why I left this stock. First of all, 75 minutes itself I would have rejected. But sometimes benefit of doubt, we compromise, benefit of doubt. Lower time frame is also not good. So this zone will be violated easily. Don't want to plan any trade. If at all this zone has to work, only one condition. Institution again, next time when prices entered into the zone, they should create a fresh 15-minute zone inside this and push the price. Next in the retracement, we may plan a trade if the next 15-minute zone and 5-minute zone structures are good. So that's why NMDC, I did not plan any trade. And POWERGRID we have already seen, and the last stock is PVR. PVR is a 75-minute zone. Hmm, 15 minutes. Oh, both the windows I kept 15. Okay, 75 minutes time frame I changed. This is a 75-minute zone. We have leg candle and 2 base candles and a rally candle. And inside we identified a 15-minute zone. Leg candle, 1, 2, 3, 4 base candles and a rally candle. And again inside this 15 minutes identified a 5-minute zone. See, this is a ERC candle I am considering. The reason is the length of this candle, look into the length of this candle, they are same. If you would have considered this base, you would have given priority to this base candle. But look into the length of this candle. Length means range. The range of this candle, the range of this candle are same. So that's why I consider this as a leg-in, 2 base candles and a rally. And my idea is we can plan a trade once prices entered into this area. But today prices did not enter into this zone. So we did not get a trade. So this is about performance of high liquidity zones. And also Q&A, the questions you have asked during this week also, I answered. Now let's all meet again in our next video. Still, if you are having any questions, put them in the comment section. Okay, thank you.